Welcome to another episode of 30 Minutes with DailyStraits.com. This is your host, June Rumley. Our guest today is the co-founder of Wealth, Brodie Haupt. Wealth is a Brisbane-based digital lending and payments provider on a mission to refresh the financial services industry in Australia. Brodie is an established leader of 12 years of experience, having successfully founded and developed numerous businesses in the finance, fintech, and proptech industries. He is also an alumnus of Oxford University, Saïd Business School, and Harvard Business School, and has been recognized as a thought leader in the e-payment and lending space. To date, Wealth they are still on target to break the 1 billion benchmark of settled loans this financial year, coupled with a corporate merger and a successful Series A capital raise. So our chat with Brodie today is going to be around a bit about everything from how an Australian startup such as his got a bank license, and more importantly, why someone should take a mortgage loan with Wealth. So, hello, Brodie. Thank you so much for chatting with us today. How are you?
Hey, June. Lovely to meet you. I'm very well today. Thank you. I will have to just correct you on one point there. We don't currently have a banking license, but we do have a credit license and an Australian Financial Services license and are registered with AUSTRAC. So we do have licensing sorted, but we don't operate under an ADI.
Awesome. Sorry about that. Okay,
right.
So let's dive right into the question. I just need a brief introduction on how Wealth got its start. Give us the lowdown.
Really what Wealth has been born out of is almost a natural progression in my career and also my co-founder's career, Drew. So previously our background has been for the last or better part of sort of 12 years in entrepreneurship. So we've started out with a property advisory firm, a finance brokerage. We played in the tech scene by building our own personal finance manager app called Money Management, and then our own proptech tool called proptech. And it was almost strangely an organic journey or process to get to where we wanted to launch Wealth. So we had this idea of understanding all the pain points that existed in the finance space, particularly in lending, because we were so close to that space, being owning a finance brokerage, to say, how can we solve this so we can get quicker turnarounds, better service for brokers, better experience for customers, and create what's effectively a full end-to-end ecosystem of financial products, so we can effectively operate and look and feel and act like a bank, but without the requirement for a banking license. So we have 4 co-founders of Wealth. We also have Darren Hodgkin and John Kerr. Darren Hodgkin is an English expat based in the UAE who is very successful in his own business, right, and a serial entrepreneur. And we met with him, I think it was around 2017 in the UAE, in Dubai, and also in Abu Dhabi, and just started off with a friendship, became quite close with his family and our family, and we travel back and forth and catch up. And look, he has quite a diverse portfolio of companies himself, and the synergies were just there. And we got talking about what we wanted to do with the iteration or the first ideation of Wealth. And he said, look, I'll jump on board and give you that sort of international consultation on how to get things set up, how to structure things, and how to create a big international business. So that's a long story short.
Awesome. So let's dive in about you as an entrepreneur. So we spoke a bit just now, and you said you worked in the corporate sector for some years, and then you did the unthinkable. So diving into entrepreneurship is a very risky thing. So tell me, how did you approach this? So you decided you wanted to go and be an entrepreneur. So what kind of preparations did you take? Because, like we spoke just now, it takes some time for any businesses to break even. So how was your approach?
We were quite lucky in the fact of, we operated in a financial advisory. We understood the business model end to end, worked in different divisions, and thought a natural progression for myself and Drew was always to be in business ourselves and for ourselves. That came back from, I suppose, an attitude or a methodology of taking sort of Robert Kiyosaki's Rich Dad, Poor Dad mindset of thinking, how can you scale yourself? How can you earn more than just being an employee for someone? And that's by creating your own business. So that's sort of how we jumped into that world. Sure, it's risky. You've got to, make sure that you've got enough savings to try and get you through. But the learnings that you take out when, your back is against the wall and you have to make revenue, you have to make something work, or you'll become bankrupt. It's pretty crazy, the things that you can achieve as a person. They say pressure creates diamonds, and I truly believe that. And the one thing that we've always taken away from business in the multiple businesses that we've taken is, we've had failings, and quite open about that. We've had more successes than failures, which is why we're still here today. But as long as you take key learnings around what didn't work, why it didn't work, and think of it subjectively and rationally, and try and remove the emotion from what's occurred, you will always be able to take those learnings into the next business. And that's why we feel with Wealth today, this is almost the amalgamation of all of the key learnings we've had from business. And, my particular story in entrepreneurship actually started when I was 19. I started a magazine, a street press, which was distributed all through General Pants and Universal Store nationally. And it was effectively around, fashion, art, culture, and music. And for us, that was a magazine. I remember the first time I went around with a folder with the plastic sleeves, with some mock-ups of this magazine we were going to build, and I was selling the advertising for the magazine space. And I can't believe, still to this day, I think we sold about $25,000 worth of advertising space out of a plastic sleeve folder, just going around and speaking to businesses and talking to them. But the one thing that you can never lose touch with is, if you are passionate about something and you show that passion and that belief within yourself and what you're representing, people will buy you. They'll buy the opportunity that you're selling. And they know that, you can always back someone with passion over someone who has the skills but not the drive.
Explain to me what Wealth is about, and maybe tell us how many customers you have.
So Wealth is a digital lending and payments fintech with a core, at the core of our DNA, a purpose-led initiative, and also around loyalty. So for us, we launched the business with property secured lending products. We have in excess of a few thousand customers now that are utilizing and using our products. And what Wealth really represents is trying to remove pain points in the industry to make things faster, better for, one, finance brokers that are writing our loans, and two, the end consumer, and then trying to solve a full ecosystem of financial products into the future as per our roadmap.
Okay, so with the recent spike in data breaches, right? So how safe is any customers' info with Wealth?
Yeah, so with us, we focus on making sure that we have what we call above bank level security. So our payments platform is PCI secure and compliant. And then we have our CTO, who is an ex-banker, in our organization, and stress testing and making sure that we conduct multiple security tests throughout the course of the year. And that really comes down to corporate governance, but also having a strong education policy within the organization itself.
Awesome. As a digital lender, because you do give out a large proportion of mortgage loans, right? So I'm just curious, when you started, the four of you, a few years ago, you needed money, right, to start a bank. So I was just curious, right? How was that process? Like, how do you how do you roll the money? Like, where do you get the money, and how did you get your first customers, to lend from you?
Yeah, it's a great question. So for us, we had a long ideation phase to understand where in the industry we were going to play and keep sort of roughing off, smoothing off the rough edges to the business model to get it to a point where we think, okay, this is a unique proposition in market and something that we feel that we can deliver. In regards to taking the step or taking the leap in terms of setting up a business like this, the four founders sat together and said, look, let's bootstrap this ourselves. We've all had our own successes in business in the past, so we're able to utilize our own capital to get ourselves off the ground. And that was a key component of what we wanted to do, because we weren't willing to give up, a significant amount of equity in the business early days, and wanted to really put our money where our mouth was. And, at the end of the day, if you're the founder, you should be able to drive that home.
Awesome. So how much was the initial capital?
So the initial capital, we put in 1.44 million as founders. So 3 of the 4 founders, myself, Drew and Darren, put capital in to help bootstrap the business. Then in March of 2021, we did a seed round under a safe note instrument. So a safe note is secured against future equity, and it's basically like a convertible note, which it was tied to our Series A raise, which we've just completed recently. And it meant that we were able to offer those incoming investors in the safe note a 30% discount to the Series A value, which was set at a pre-money valuation of 81 million.
Awesome. So from the early days, right, where did you get your customers and how did you get your customers? Were they your friends?
Yeah. So, I mean, that's exactly how businesses start, right? Like you will always create a friend and family test use case. So refinance a couple of loans that we all have. And then we made the decision to go to the direct market. So it was all through social media. We've got a really strong brand and a really keen focus on brand awareness in the market. We want to become a household name in Australia to begin with and then globally. So we focused on delivering customers through to our digital application process, our front-end application process for consumers. They can apply for their own loan via what we call as the wealth lending loop, which is available on our website today, wealth.com. And what that does is it takes out the pain point of double handling data. So it pushes straight into our loan origination system. Then one of our internal lending specialists can pick up that loan or that application from a customer and then backfill any missing information to get to a reduce the time to yes. So a faster approval process is really what we were trying to build there.
Okay, so 100% mortgage loans or any other loans do you give?
So right now, just focused on property secured lending. So we play in the residential space, the commercial space, and also the SMSF lending space as well. We are looking to create further credit products, and one in particular will be an invoice finance product, which will sit within our payments platform, WealthPay, which is a business payments platform that makes it easier for businesses to make payments out of their business. Whereas a payment gateway is receiving payments, WealthPay will be paying payments out of your business, and you can earn points and pay for things via credit cards. So you can utilize the interest-free periods on your credit cards to make business payments and the like.
Okay, so tell me also you actually created the software for Wealth, and you did tell me earlier just now that it was it's your bespoke software, right? So are you looking at this space as a business in the future where you actually develop software for future startups who want to do their own bank? Are you looking at that as a part of a business?
We did look at that early days, but it's quite a saturated market, would you believe? So for us, at the moment, we have no plans to turn it into a SaaS model. It's not software as a service that we want to portray. It's really our IP. So all the front-end application systems, our middleware, and our single customer portal, so the customer experience is all ours. We do utilize an off-the-shelf origination system, which we've worked really closely with that business to help deliver it. And that was really in response to the way that we fund our loans. So we don't do balance sheet lending. It's off balance sheet. We utilize what are called mortgage warehouses for us to source our funds from. So the major 2 warehouse funder partners that we utilize are generally funded by the major banks in the Australian market. So the major banks will dump capital into these mortgage warehouses, then we ingest those funds from the mortgage warehouses. So we are the digital lender of record. We just are not the funder of record. So it's not whole of book lending. And that meant that we could basically grow the business at a much faster rate without having to try and raise capital to lend that money out ourselves, whereby we're utilizing a funding warehouse solution, which gives us the ability to scale faster and much larger.
Okay, so also you said you were in 3 states, Queensland, New South Wales, and Victoria. So what's the plan there? Are you going to go further into Australia, or are you moving away, maybe US or UAE, like your partner, one of your partners are there? What's the
long-term vision would to be operating in all the Westminster countries around the globe. So, the likes of the UK, Canada, the US, New Zealand, Singapore even, sort of those Westminster finance frameworks that are set up, because it's much easier for us to adapt our systems to do that. That's long term. Probably some of our team would get a bit scared off if we started telling them we're going overseas straight away. But really what we're trying to do is create a POC in Australia, a proof of concept of our full ecosystem. It's one of the most highly and tightly regulated finance sectors in the world. So it becomes a much easier proposition to take it to other territories once you stood up a really successful and strong business case in the Australian market.
Okay, so what's the turnaround period when I put in a loan, when I put in an expression of interest for a loan? What is it? So right now, I think with normal banks, it's 2 to 3 weeks or maybe more. What is your time frame?
Yeah, for us at the moment, we've got a 48-hour approval period that we try and stick to, our service level agreement with our incoming clients. We are at the moment testing our instant approval, so our decision engine loans across our whole portfolio. We do have one loan in market which is available to finance brokers, which is our rapid refinance, which is an instant approval. So that's the first iteration or the first product that we're able to get to market, which provides an instant decision engine approval for a particular loan product. So that's the end state. We want to be able to have that, by maybe the end of this year or early next year, all of our product suite under the decision engine lending. So if your loan, your application fits within our policy, then you'll be able to get a green light and approval on the spot, which is something that we're really proud of.
So how do you check and see if that person can pay? Do you do all those kind of checks? Like
so ID verification checks, credit checks, valuation checks. So it becomes quite a nuanced space when you start looking at the different bands or matrices of how we can handle or ingest a loan application. But if it's under 80% loan to value ratio on the property, then we can rely on an automated valuation methodology as well. So we can push that out to Valex, which is our valuation partner, get a result back. As long as it's fits within our policy, then we can give an approval. If it's outside of policy, it'll just push into manual review, which will then go into that 48-hour SLA period.
Okay, another 3 more questions. So, all right. The final 3 is like working with partners. So 4 of you, how do you overcome business arguments? Like some business arguments can turn really ugly, right? So did you, like, before getting to business, did you guys map out, like, do you have some kind of veto thing where you take votes? How do you work?
Yeah, so it's a journey, right? So originally with 4 founders, you need to be able to treat each other with respect first and foremost. It's really easy with myself and my brother Drew, who's one of our co-founders, because blood's thicker than water, right? You can have an argument with your brother, and then the next day or 5 minutes later, you can forget about it and move on. With your other business partners, you just need to be respectful of each other's opinions. You won't always agree. That's the first component. And then it's around putting corporate governance in place to have an approval process or have a voting process as you formulate an official board structure, which we now have. So that's all captured within the shareholders agreement. And as long as you can spend time on understanding how you make decisions in your organization, then it becomes really black and white, and there's never really too many gray areas.
Okay, so exit strategy. I'm just curious to know, when you guys banded together, do you guys think that far? Or
Absolutely, particularly when you're raising capital, it's one of the first questions an investor asks. What's the exit strategy? When can I get my capital out of this investment? That's how they're considering it, right? So, our end state or exit strategy would be to look to list and become a publicly listed company. But we are very cognizant to the fact that you don't want to rush those things. We have, 2 really key benchmarks that we want to achieve before we'd ever consider that. And that's about having $2 billion of payments running through our payments platform and $2 billion of lending on our loan book before we would even consider that sort of option. And then you've got to take in market conditions, influence, whether it's right for you. The second alternative, and this is what we were speaking to earlier, is about just being adaptive as business leaders. You could say, listing is our only option, but in actual fact, there's probably 100 different ways that you could look at it. So we may have, a large institutional investor that may come to us in 12 or 18 months time and say, look, we want 30, 50, 80% of your business. You strike up a deal, you stay on board with them, and they may want to have you stay private for that period of time or however it may work. But yeah, there's multiple ways for us to exit the organization.
okay, so are you open for the big 4 banks to buy you up, since you said you have no banking license?
Yeah, I mean, it's it's an option. It's not one that we're really favored towards because we do see ourselves as direct competitors to the whole banking model and institution. I wouldn't rule it out. That's generally what's happened, and unfortunately it has ruined a lot of competition in the space by the likes of 86400 being bought by NAB. TikTok Home Loans is effectively, made majority owned from my perspective by Bendigo and Adelaide Bank. You want to make sure that we have more fintechs coming into the space to, really hold the major banks' feet to their fire, because right now what we're seeing is we are seeing a trend in this raising interest rate environment where the banks are saying we're too big to fail, and they will start price gouging and adding further margin on top of the RBA cash rates, which is just something that we don't believe in. Consumers are the ones that have to wear the responsibility of the economy in bad times, and don't necessarily always get the benefit of the good times.
So you are open for a buyout by the bank or not?
As I said, it's about being adaptive. You need to understand and have a look at all options. It's about making a deal that's right for your staff, your team, the investors, and also your customers.
That's very good.
We wouldn't look at a full buyout, that's for sure.
Okay, finally,
right?
Final question. Okay, so for startup, right? If somebody takes your loan, and then they default, so what do startups do to get their money back?
Yeah, so for us, the way that we've got our funding process in place, we have a customer service team who would look at handling any inquiries for customers that enter hardship, which will happen over the next 12 months. Right now, we have zero delinquency or arrears across our loan book with our customer base, which I think speaks volumes to our, quite stringent product and policy process. But also, just really talks to the fact that we think that our customers appreciate what we're doing, particularly in the purpose-led space.
Awesome. Alrighty, and that is all the time that we have today. We have just been speaking to Brodie Haupt from Wealth. Thank you so much, Brodie, for joining us today.
Thank you so much, June. Appreciate your time.
Thank you, and the pleasure is all ours. Be sure to join us the next time as we aim to deliver another interview from an awesome entrepreneur across Australia. Thank you.
Thanks, June. Bye.
Bye.